Hello and welcome to this week's episode for the Stock Market Update brought to you by Conservative ETF Investor. I am your host. My name is Ken. Today's date is November 4th, 2017. Here we are on the homepage for Conservative ETF Investor. Once I'm done with this video, I'll upload it here so you can click on it. I am going to scroll right down so you can see what our current recommendations are. And we have a hold posture on everything, as you can see that right here. And you can see how well this portfolio has done on each one of the positions. I guess the most profitable position is this one right here, with a total return of 27.74% in VEU. 10% of our holdings are there. Okay, what else do I want to show you? Let's see here. How well has the portfolio done in 2017? In 2017, the portfolio has gained 8.72%, not including dividends. And since our buy recommendations, the portfolio is up 12.66%, which is excellent considering that it's an extremely conservative portfolio. If I break that down into my holdings, the S&P 500, where we have 40% of our money, has gained 22.5%, so if you want to put that into perspective. Our beta on our portfolio is a 0.59 beta, meaning that its volatility is not as severe. So if the stock market does begin to tank down, you'll see that we've got a lot of positions here which are offset that from the S&P 500. All right, so and then we have 10% of our money is in cash as well. Okay, if you want to learn more about Conservative ETF Investor, you can explore the different tabs here about our portfolio ideas and current recommendations. And if you want to drop me any notes, down here on the homepage there's a contact us message capability. Right now, let's jump right into our charts. The first chart that we want to look at is the S&P 500. So we use the stock charting services, stockcharts.com. And the way that I like to view the charts is with, let me get rid of that inspect mode. I like to view the charts with weekly candlesticks. This is a 5-year time horizon. The years are down here at the bottom. And let's see here, let's just move this out of the way so you can see just about everything you need to see. Okay, the S&P 500 last week gained 0.29% for the week. The S&P 500 is trading in this upward trading wedge pattern where we're right in between these 2 points. Coming over here to the thumbnail, you can see here how that the angle of growth. That angle of growth is a pretty steep angle. I'm assuming that is eventually going to break down, and we're going to at least come down into the blue support line, which is a 17-week EMA. We have two exponential moving averages. The blue is the fast 17-week, and the red is the slower 34-week exponential moving average. You see we touched into the red here in 2016, but in 2017 it hasn't even barely touched just the blue once right here in this time frame. We use two moving averages, two momentum indicators, two momentum. We use the MACD, which is this top one right here, where right now the MACD is above the signal line, which is a bullish indicator. And underneath that, it's slow stochastics. Both of these are at default settings. And the slow stochastics is above 80 and running parallel to its signal line, which is pretty bullish action. And then down here, I just got here the dividends and when the dividends come out. All right, so that's it for the S&P 500. Let's move on to our next chart, which is going to be VEU. VEU, where we have a 10% position in is the Vanguard All World excluding the United States ETF traded on the New York Stock Exchange, had a positive week, gaining 0.82% for the week. You can see the upward trading wedge pattern that this ETF is in, and we've basically been hugging and kissing this lower support line, bouncing off of it, and continually moving farther higher as each progression goes on. It's just been outstanding, really. The MACD, it's just kind of running flat at this time, and you could almost say that that's a negative divergence, and I'll explain what I mean by that. Let me put on my indicator so you can see this a little bit better. So if I start somewhere around, let's say this time frame right around here, and I come up and I see where the ETF is trading, and then the ETF has gone up, but the MACD is not making new highs. It's been running parallel. Kind of that would be considered a negative divergence because it's not confirming the trend like it did here. As the ETF makes new highs, the MACD makes new highs and continues to move farther north. But that activity stopped somewhere around June of 2017 and has been running flat. But it would not have been a good time to exit because you would have missed out on a 7.4% gain since this time frame to where we are right now. So not exactly a reason to sell, but a reason to be concerned. So if this begins to break down, this is like pre-warning telling you that this is what is anticipated up ahead. And considering the bull run that we've had off the lows all the way up to here, 27.52%, it would not be unexpected to see a 10-15% correction come into here. And this is what it looks like over in the thumbnail. MACD bullish, as well as the slow stochastics above 80, but it is below its signal line and traveling down. But the fact that it's been kind of bouncing in this range for quite some time is just completely bullish activity. All right, let's move on to our next ETF. That's going to be VNQ. VNQ is the Vanguard Real Estate Investment Trust ETF traded on the New York Stock Exchange, had a positive week, gaining 0.98% for the week. Here you can see that in VNQ, we've been bouncing back and forth in between this upper resistance line and this lower support line for quite some time. And again, we bounced off of it again. You can see right here where we just on these two tails on the last two trading weeks, the current trading week and the week prior to that, we bounced off the tails, and the expectation is that hopefully we will come back up and hit this resistance line, and we'll see if we have enough energy in order to move forward. You can see that the MACD has been confirming this sideways action as well, back and forth, back and forth, back and forth, not breaking out one way or the other. Slow stochastics, same thing, riding pretty much between 50 and 80. Okay, we are on a wait and see and hold. Again, we're on hold recommendations on everything. Okay, this sell order that I have down here at 85 is that if it comes up and it was to hit that, the expectation would be that it would come back down. So as a trader, I was going to put in a sell order here. But as an investor, we want to stay and remain invested as long as possible. As an investor, they say it's not timing the market, but time in the market, how you make your money. All right, let's move on to our next one, which is actually not an ETF, but a mutual fund. This particular mutual fund, hang on one second, has a duration of 1.5 years, meaning that if indeed the interest rates were to rise by 1.5%, this would drop down 1%, which is an excellent low, very, very low duration, considering that we're in a rising interest rate environment right now. Most recently, the Fed did not raised the rates. They remained on a hold recommendation, but paved the way for a December rate hike assumption of 0.25 basis points, no, 25 basis points rather, or 0.25%. But here you can see that for the week, this is on a weekly chart for OSTIX, which is a Osterwise strategic income fund, had a gain of exactly 0% for the week. So it was just a flat week, but you can see how well this is done. This is very conservative. We have a 25% position in this very conservative mutual fund. Two more charts to look at today. The first one is the VIX. The VIX is the volatility indicator. You can see right here, volatility index for pretty much the S&P 500. Now, this particular indicator is an inverse indicator, meaning that when it goes down, the S&P 500 goes up. I've got the S&P 500 down here, and so as this comes down, the S&P 500 pretty much travels north. As this goes up, the S&P 500 either goes flat or comes down. Right now, we have come down, so the S&P 500 over the past week has done fairly well. The only concern is that we're at extreme low levels here. And when you reach extreme lows like we did here and here, the place to go is up for the VIX. And when the VIX goes up, S&P goes flat to goes down. So risk levels are increased. But if you were in during this past week, you've done well. Now let's go over to the VXN, last chart of the day. VXN is the volatility index, but this is for the NASDAQ 100. Although we don't trade the NASDAQ 100, I like to watch it because the NASDAQ 100 is a major equity index for the United States, and as the S&P 500 goes up, the NASDAQ should go up. Technically, the NASDAQ should actually be leading the way, and when it doesn't lead the way, that's an area of concern. Here, you can see that we've had a negative, well, this was now the chart frame on my volatility indicators is no longer weekly charts, 5-year time duration. I use 1-year time duration with a daily chart. See the word daily right there. That's indicating that I'm using a daily chart. Each one of these candlesticks represents 1 day of trading. So this is just on Friday's trading day, down 5.44%. You can see that down day right there. Now we have been in this kind of a asymmetrical triangle pattern. We've been bouncing in between. So right now we're coming down into this lower support line, and once it does that and bounces and comes back up, that would put extra pressure on the NASDAQ 100 to go down. So here I've got the symbol QQQ, and so we'll monitor that. Also on the MACD, you can see we've topped, crossed below the signal line, and we're heading down. So it's very possible that that we are going to see some the extra risk here in the NASDAQ 100. Okay, but generally speaking, actually, let me take that back. I got confused myself for a second. When the MACD is below its signal line, that's more bullish for the NASDAQ 100. Here you can see where we had a crossover where the MACD is heading down, and the VXN is heading down. And what happened to QQQ during that time, which is the NASDAQ 100? Well, it was traveling up. So again, it's an inverse indicator. So as the MACD is traveling down, that fares well. So I'd guess I'd put this more into a neutral condition on the NASDAQ 100 because it's getting ready to come down, hit that support line, potentially bounce off of it and come up, which will put additional pressure as the VXN goes up to make the QQQ NASDAQ 100 go down. All right, that is our video for today. Again, this is the stock market update brought to you by the Conservative ETF Investor. I am your host. My name is Ken. Hope you've enjoyed today's episode. Please hit the like button and subscribe, and I will see you later. Thank you for watching.